Right, so hello everyone, hello. Welcome to FNA's 18th CBDC broadcast. As always, we have another two fantastic guests for you today. I think it's safe to say in the previous 17 episodes of this broadcast, the vast majority of guests have definitely been on the pro-CBDC side. Our guests today aren't anti-CBDC by any means, but I think they're definitely more on the skeptical side of the fence. So it definitely promises to be a really interesting discussion. Now, before we do that, just some very, very quick housekeeping. This broadcast follows a 60-minute format, so roughly 45 minutes of discussion with our guests, and then we'll have a Q&A at the end. Please do ask questions for that Q&A session, but I would ask don't use the chat functionality. If you use the chat button, your question's likely to get lost. So there is a little icon at the bottom of your screen that says Q&A. If you want to ask a question, pose your question through the little widget at the bottom that says Q&A, and then if we have time at the end, our guests will hopefully cover as many of them as we can. We typically get through them. So I'll just explain very, very quickly what FNA does. We are an advanced analytics and simulation technology company. We work across four core sectors, namely central banks, commercial banks, payment systems, FMIs, and national security. Next slide, please. So in relation to CBDCs, we also have a CBDC simulator, which provides a digital replica of any payment ecosystem. So during the design phase, the simulator gives users the ability to understand both the economic and financial impacts of introducing a CBDC. And then after rollout and the post-launch phase, then it gives users the ability to monitor, to improve, to analyze and tweak CBDC usage as well on an ongoing basis. So there are a number of organizations that are using this solution, including a very interesting live project with the G7 central bank that we look forward to discussing and presenting more in a future episode. So I promise I'll be quick. I'm going to hand you over now to Dr. Carlos Leon, who works here at FNA as Director of FMI and Digital Currency Solutions. So very, very topical for today, very relevant. And then Carlos will introduce our speakers, and then we'll get the discussion kicked off. So, Carlos, thanks, and over to you.
Thank you, Anthony. Good morning, good afternoon, depending on the place of the globe you are at right now. So I would like to thank Michal and Samuel for joining us. As Anthony already introduced, we're going to have a very different perspective from what we are used to in the CBDC broadcast, and this perspective is a rather, the way I would describe it is like a rather agnostic one. Michal and Samuel, they both come from central banks of the Czech Republic and Denmark, which are two central banks which have a rather agnostic perspective in the sense that there are no immediate plans to design, pilot, or roll out a retail CBDC. So this is a very interesting discussion to have because, as I already mentioned, normally in this broadcast and in most broadcasts that you can think of outside FNA, what we have is how fast are we going to do? What are the design options that we're going to deploy? But the first question that we should be asking ourselves is there a space for a retail CBDC? Is the use case there? Why having a retail CBDC? So that's why Michal and Samuel are joining us today. Just as a matter of a very brief introduction, Samuel is leading the digitalization task force of the Danish Central Bank at the Central Bank of Denmark, whereas Michal has been working for the Czech National Bank since 2010, dealing with regulatory and policy issues of payments, innovation, and consumer protection. So Michal, Samuel, thank you very much for joining. If you have any declaration or disclaimer, this is the right moment to do it.
Hello, everybody. Just the usual disclaimer from me. The views are personal, but I'll be pointing out when I'm representing the official position of my employer. Thank you.
Yeah, and thanks for having me. And I'll echo what Michal just said. Also, this will only be my opinions, not necessarily reflects the one of the Danish Central Bank. Yeah.
Great. I know this is important because I worked at the central bank and I know how delicate these kind of things are. So let's break the ice. So for both of you, could you tell us more about your current work in the realm of digital money, including retail CBDCs, and how it contributes to shaping the future of money. Let's start with Michal then.
Okay, maybe I'll start. If I can sum it up in one sentence, and I also learned something prepping for this webinar. You probably know the English saying, "If it ain't broke, don't fix it." So I tried to look up how this was created, and actually I think it applies pretty well to this discussion we are going to have. So it was first used by a manager in Jimmy Carter's administration in late 1970s. And what he actually said, he said, that's the trouble with government, fixing things that ain't broken and not fixing things that are broken. So basically, when CBDCs became a topic, we had a look at the various reasons that are given in different jurisdictions that were ahead of us in this, and then we tried to we looked at the situation here in the Czech Republic, whether it would make sense to go down this route, and I can also provide a sort of more structured document how we went around with it. Then and when we saw even more interest, I think the Danish Central Bank was one of the first ones who published, if I'm not mistaken, in 2017, a nice sort of summary how electronic payments are working rather well in Denmark, and they don't see at that time, or they didn't see at the time, any need for CBDC. So that was one of the things that we read with interest, but also we were thinking maybe we are missing something. So in the end, we used a document that was issued by Bank for International Settlements, BIS, and G7 central banks, and they listed a sort of 7 reasons why CBDCs are being looked at in developed jurisdictions. And we went through one by one, looked at the situation in our domestic market, and basically came to conclusion then that either we don't have the issues that are being solved, like issue number 1 is access to central bank money in Czech Republic, cash, maybe not still the king, but still pretty important. If you look at the proportion cash to GDP, it's still above 10%. Until recently, the trend was actually rising, so we were up to 12%. Now we are down a bit with inflation and higher monetary rates. People actually now start taking holding cash is not free anymore, so people try to put money in a saving bank accounts and stuff like that. But still, cash is used daily almost everywhere. We have strong legal tender laws, unlike in Sweden, so it's actually mandatory, and theoretically you could end up in jail for not accepting cash, which nobody ever did, as far as I know. But still, we have a strong legal protection for the role of cash. And maybe I'll stop with this. So, but the question was, what are we doing now? So, of course, we're the country, or we surrounded by Eurozone on 2/3 of our borders, and we do the most, a lot of, our main business partners are in the Eurozone. So we're watching the developments of digital euro, with great interest. And just yesterday, the legal proposal was published. So you can imagine what I'm doing when I'm not speaking right here with you. And second thing that is interesting for us is the offline functionality, because that would be something that we see as a possible game changer. If somebody can come up with the offline functionality that would work well from a user experience point of view, but also was safe enough, that would be a substantial evolution of what we have now in a form of electronic payments. But we're not as interested in it to do it ourselves. We'll just see if somebody comes up with something that works. In general, it's a very pragmatic approach. We're a small open economy, small central bank with a lot of roles. So we don't see a reason to duplicate or triplicate the interesting work that is being done elsewhere. If somebody comes up with a working solution, we're quite happy to be a late adopter of something that works.
Great, Michal. Thank you, Samuel.
Yeah, so I think to a large extent that what Michal just has mentioned also applies in our context. It's true that back in 2017, where it all started, I mean, the beginning of discussion, we issued a report that was quite negative on CBDC, that couldn't really see the benefit of creating a CBDC. And this is also to be seen in the light of our payment system here in Denmark. So of course we're a small economy, but highly digitized. We've had the instant payments for quite some time, since 2014, I think. Two-thirds of person-to-person payments are instant. There's a lot of digital payments. I think it's around 90% of face-to-face transaction is carried out with payment card or mobile phone. And there's 100% financial inclusion. Every citizen has a bank account. There's a high level of trust. So these, we see the payment infrastructure and the payment services, I mean, relatively high developed with innovative solutions. So it's difficult to see how a CBDC could add to that. But so recently, in 1 year ago, we published another report on CBDC, actually revisiting some of the arguments that Michal also mentioned, and actually took them one by one, and I more or less drew the same conclusion, but perhaps a bit more. I mean, this is a developing area. I mean, it's difficult to see what the future will bring us. So you as mentioned in the beginning, it's not, we should be open to discuss this on a continuous basis. So we've taken also the more why approach instead of the how. And try to focus on the questions: what problem could a CBDC solve? What frictions may exist or may emerge in the future that only a CBDC can solve, or that a CBDC can solve most efficiently? And at present, with the associated costs and risk, that it's not clear to us how a CBDC can create added value to that. And just perhaps a difference, we have so our cash use is declining very much. Less than 10% of payments. The overall stock of cash is more or less unchanged, but of course the cash is very much declining. But that still does not lead us to into an argument in favor, at least at this point in time, in favor of a CBDC. And that's the whole monetary anchor discussion that I think we might discuss later. So I'll just stop it here, Carlos.
Thank you, Samuel and Michal. Now I'm going to take advantage of something that Samuel mentioned, which is why not working on the why first. And this is the second question for us to discuss. Is that most discussions about retail CBDC have to do right now with when and how. Why have we abandoned the why question? It's like a philosophical thing. I mean, why are we discussing the why of the retail CBDC and everyone is discussing the when and how? What do you think, Michal?
Well, I think first thing that I'd like to point out is there's the difference in size, right? When the first impulse, I think, was the DM or Libra, the Libra proposal by Facebook, nowadays called Meta. And of course, there's a difference is if you are Eurozone and you are ECB, of course you think about promoting, the international use of euro and monetary sovereignty. But if you're a small open economy like the Czech Republic, basically you were always exposed to competition from foreign currencies, in particular the euro. So if you do your central banking job well, then you don't have to worry about losing monetary sovereignty. But if you're not doing it so well, then the threat is real, and it doesn't have to come from Facebook. So this, I think, this is the main difference. If you look at I think it's as I said, personal view, but there's an obvious geopolitical component in the Chinese and European work on CBDCs, I think, which is, this is a motivation that we are lacking, in smaller countries. And as was mentioned by Samuel, financial inclusion is not a concern in developed European countries like Czech Republic and Denmark. And in any case, saying that doesn't mean we don't have people who are excluded from financial services, but quite often it's a voluntary exclusion. And it's interesting if you look at the cases in Caribbean and Nigeria. Actually, the colleagues over there are trying to reach with CBDCs are those that trust the government and central bank the least, and they don't want any CBDC. They're very happy with cash. So the question is, are you really using the right tool for the goal that is stated?
Yeah, and to follow up on Michal, I agree very much. I mean, I think it's true. I totally agree with there's a size element here, and also I think there might have been a sense of urgency. I mean, the combination, as Michal says, about the introduction of Diem or Libre, we had more or less at the same time afterward we saw the rise in crypto and stable coins, both value, market cap, and usage. There were big techs was going into and still are going into financial services. We saw the COVID pandemic really boosting the use of digital money in the expense of cash. So and developing CBDCs in other countries. I think all these quite clear tendencies might and to a fair enough created a sense of urgency that central banks really need to think on how to respond to this. And the very quick way to respond is to really, get some dirt under your nails, right? To get some experiments going on. And that's not to say, not to underestimate the knowledge and the experience that I've gained from all the experiments that has been carried out, right? I mean, a lot of relevant research has gone into this and led to better understanding on how new systems can be developed, how existing systems can be improved, by making it more efficient, resilient, and on privacy and so on. So I think that might have been, to some extent, be an explanation. But I think there's still a debate on the why, and perhaps it's increasing a bit. I mean, there's a focus on the narrative. What is the problem that a CBDC should solve, right? And the alternative tools because some of the problems are legit. I mean, are fair. And to think whether instant payments, enforcement, regulatory steps, these considerations are, I think, and wholesale CBDC are slowly moving into the equation, I think, in the discussion.
Maybe if I may,
Samuel, Michal. Go ahead.
Two more points to make. One is also about the situation in Czech Republic. We are historically probably the most liberal country of the former Eastern Bloc that joined the EU. So with that comes sort of skepticism to big, ambitious public projects and to central planning I don't mean it in a bad way, in general. So, for example, a difference between us and Denmark is that, if I'm not mistaken, Denmark still has a national card scheme, Dankort, if I remember correctly. We never had any initiative to have a national card scheme. We have only Visa, MasterCard. It's interesting to point out in this connection that in last, let's say, decade, Czech Republic always ranks in probably top 3 or top 5 countries worldwide in contactless card payments. Also, big penetration of big tech wallets as well. So, but this, of course, the infrastructure did not come cheap. So we were also the country with the highest interchange fees for many years before their regulation. And there was never any move to, to regulate them on national level, or we just understand that, or we still trust the market even if it's a market with big network effects and so on, that market delivers the best results. And we are quite hesitant to intervene in the market in general, and especially with price regulation, because we are, we are not sure that price regulation can be done. It's difficult to do price regulation well in general, and without some unintended benefits. So that's also one of the motivation for us to be, to think twice before doing anything, also in the area of CBDCs. And then second thing about the why, I find the discussion about money fascinating, and I think also necessary, because many people have many misconceptions about many issues of money. But I think one thing that was great that the CBDC debate, pointed out, or led to pointing out, Sir John Cunliffe, the Vice Governor of Bank of England, made the point that the way money works now is a historical accident. It was never like a democratically decided that banks should be allowed to create book money from nothing. And I would go one step further and say that if you look at, when the Bretton Woods system collapsed in 1970s, when dollar was taken, stopped being backed by gold, this was not some kind of like a well thought out policy plan. That was just a sort of negotiating ploy by US. And the idea was that the exchange rates are gonna reset at the time and everybody will go back to gold backing. It never happened. So we're now living in a sort of experiment that we learn how to manage, but it has some consequences, and I think it's fair to discuss them openly. And CBDC is perhaps a good reason to have such a debate.
I think those are really nice topics that you have brought, Michal and Samuel. I think that's something that has always bothered me is about, and that's the reason why we included the FOMO, or fear of missing out, topic into the title of the discussion, which is, I think that at the beginning, many central banks saw this as Michal said, like let's design money once again, and this is going to be very easy, because as a central bank, I can just have a decree or a law about the money, and that's it. And what early adopters, as you mentioned before, Nigeria, Bahamas, Jamaica, other countries in the Caribbean, they have experienced a very low and slow adoption. So I think that the why is coming back once again, because we have seen that it's not as easy as it looks. So that's also, I think, a good reason for the why having a bounce back. So I think that to jump to the next question, is that these kind of things related to the fear of missing out, and that's what I was going there a couple of seconds ago, is that those fear of missing out topics, normally they're one-sided. Normally we hear that financial inclusion is great, but we barely discuss whether people want financial inclusion or not, whether it delivers what it's promised a lot of times. Is fear of missing out also a topic here in the retail CBDC space? I mean, are we discussing a lot of the benefits, but none of the problems or challenges, perhaps? Michal, what do you think?
Well, in our case, or in case of my institution, we also had the discussions, aren't we missing out something? And especially when you see how much effort is going into it all over the world. So of course you get the questions from your superiors, like, aren't we too skeptical, or shouldn't we be more proactive? But I think or maybe one reason why to be to be a little careful with CBDCs and is how would you communicate that to the public? And I think it's something that the Eurozone, it's going to be interesting for me to watch how the Eurozone will tackle this challenge, because already the questions that come to central bank here from let's say people who are maybe you know, more on the paranoid side or are reading weird things on the internet. You know, we all know them from the pandemic times. So now they are already asking us, so when will you ban cash and force us to use CBDCs? And they're watching these like videos on the internet that have very little or maybe no basis in reality. So how would you, and these people will be probably as noisy during CBDC discussions as they were during pandemic discussions. So how do you handle this? And, you know, are central banks prepared or well equipped to do the marketing exercise for this kind of wholesale change, if I may, for the way we are paying?
Thank you, Michal. Samuel.
Yes, so I think, I mean, it's an interesting discussion. I would, the FOMO discussion, you can turn in many ways, right? You could argue that in the DNA of a central bank, there's a FOMO, right? I mean, related to detecting threats to financial stability. I mean, we want to be sure that we don't miss out any threats or any emerging threats that may affect financial stability or the monetary sovereignty. And still working with CBDC, all the benefits, but you don't want to miss out the drawbacks either. So one thing is the why, to whether to do it or not, and then the next thing is how to do it right. And I think our take is that CBDC is a very large institutional matter that changed the structure of the financial system, right? So and as Michal said, will expand the role of the central bank, and such a change comes with substantial economic, operational, reputational risks, and that's why the argument in favor of doing so should be very, very solid. Just to mention, perhaps and I think Michal also just touched upon this before, but just one of the challenges is that there's the double or triple role of a central bank if doing this, right? So private banks today, they handle the retail payments, they sell them in deposit accounts, and in a situation with CBDC, they would to some extent compete with CBDC, the central bank, right? Being an alternative to central bank money, and still at the same time cooperate with it, because they would, depending on design, most likely distribute and carry out front-end functions for CBDCs. And this would create, potentially at least, adverse incentives for payment service providers, and warrants a very well-designed compensation structure that manage all this. And furthermore, if a central bank starts to develop its own solution or consumer-faced application, that may even also distort competition in the payments market, right, by subsidizing its own solution. So these are just some of the challenges that are there, but also reputational risks. I mean, a central bank is not a startup. So if you develop a solution, I mean, you should be quite sure that you get it right. I mean, credibility is a top priority for central banks. So taking new steps should be well thought and well assessed before doing so.
Thank you, Samuel. I love something that you just said. Central bank is not a startup. I agree with that 100%. So I think that central banks should treat this design and rollout of CBDCs very carefully. And going to exactly that same spot, the next question is about why do you think that the early adopters like Bahamas, Nigeria, the pilots in China and in Jamaica, they're showing low and slow adoption? In terms of what you just mentioned, Samuel, and that's why I love your expression that much, is that is this like the result of dealing with retail CBDC from a startup point of view? Like, let's how the startups say that, like let's break things. I mean, let's go crazy and break things, and let's try to fix everything right down the path, and let's try to do that. Is that the case, perhaps, what is going on with the low and slow adoption in these early adopters? Let's go with you first, Samuel, for a change.
So that's a very interesting question. I mean, so I'm no expert on the conditions and the circumstances in these particular jurisdictions and the reasons, but I think it's fair to say that it's a complicated task to establish and issue a new means of payment and a new payment system. I mean, a lot of big players have tried to do so and failed, and this is not an easy task because it's a two-sided market. You need both merchants and consumers on board, and they both need to see a concrete use case in order to use it, right? So perhaps merchants can see a use case if it's cheaper than the market solutions, if it's subsidized or if it's regulated in some way. But that doesn't necessarily result in an uptake, right? Because the consumer, the other side of the market, has to see a use case as well. And I think it's mentioned that it was my governor, I think, said that CBDCs is a small step for consumers, but a giant leap for central banks. And so if the consumers do not see a particular use case, and this is, I think, perhaps even relevant in digitized countries where there's already instant payment and innovative solutions, then it's very difficult. I could just to give a quick anecdote from Denmark. There were years back, there were two mobile solutions competing in Denmark, and one solution was based on account-to-account payments, and the other was based on card payments. So in principle, the account-to-account solution was more efficient and less costly for merchants, and perhaps in theory a better solution. At least from a cost perspective, you could argue. And the other solution based on on payment cards, here they had the regular interchange fee and so forth. So it was not a particular cheap solution to develop, but the convenience played a much larger role here. So the consumer-faced applications from the solution that was actually based on traditional card payments was superior to the competing solution. So and that was the one who won the market, took the market, and the other one had to go out. So there need to be a particular use case for consumer, and I think that's one of the big topics, and you cannot underestimate the importance of payment service providers that are in most CBDC experiments or pilots are seen to develop these user interfaces. I think they will play a very large role in the uptake.
Thank you, Samuel. Michal.
Yeah, if I can follow up on this, like Samuel, I have to admit that we don't watch the situation in Caribbean or China too closely because we just don't see it as being very relevant for us. But I did read up a bit on the developments there for a conference that was in Prague about a month ago. And I understood that in case of Jamaica, I think the issue was that the integration into the supermarket payment systems has not taken place yet. So that was one thing. And maybe what was interesting for me the most was the different route taken by our colleagues in Nigeria, where, if I understand correctly, there is no, they're not using PSPs, they're not using banks as intermediary. It's the CBDC is provided by the central bank straight to the population, so not intermediated. That's quite interesting, but has not really led to much different results, even though some, I think, rather drastic steps were taken, coincidentally or not, like limiting cash at the moment. So even if you really give a lot of incentives to the potential users, you can drive some adoption, but looks rather limited. And so I'll leave it at that, probably.
Thank you, Michal and Samuel. Let's go to the next one. And it has to do with something that we already mentioned before, which is the declining use of cash. So if a central bank decides not to design a rollout of CBDC, is not this like surrendering the central bank dominant position in the provision of money to the public? It's just like allowing the private sector to be the provider of money? Michal.
Thank you. Well, we're not in this situation, so we haven't really done much thinking on this topic yet. So it's perhaps I'll leave the floor to Samuel very quickly. But it's interesting for me to just mention or to watch the developments in Sweden, where the issue is quite, probably the most extreme situation in the whole world. Although I understand all Scandinavian countries went rather cashless. But even in Sweden, in the end, what happened is that Riksbank was told by the parliament that there is no reason for CBDC just yet, and instead they're taking steps to promote, access to cash. They had a legislation to force the biggest banks to provide cash services to population. So even in this case, the solution that we see abroad as being implemented is more to protect cash than to actually implement CBDC.
Thank you, Michal. Samuel, I think this question is better for you, right?
So this is a very interesting question, right? And this is one of the key questions in our, also internally in our discussion and in our assessment of the pros and cons with the CBDC. So, and it's true, we have very little cash usage. It's declining. We have, as Michal also mentioned, that mandatory acceptance of cash at merchants. So that's the difference between Denmark and Sweden, for instance. That merchants are in most instances obliged to receive cash. So the monetary argument goes that it's phrased in different ways, but basically that cash consumers or citizens need to have access to cash in order to ensure the trust in money general, right? So the ability to withdraw bank deposits and hold it in cash, and then perhaps putting it into another bank, that ensures that the parity, the equal value of central bank money and private money, and it ensures trust. So we're very hesitant to conclude that, even though that cash is almost out of the Danish payments, right? Firstly, I think there are a couple of. Firstly, it's a very philosophical, complex question. What ensures trust in money, right? And I don't think, to my knowledge, there's not a much empirical evidence and research gone into this particular role of cash. And an often quoted example is the free banking era in the US, I think in the 19th century, right? Where commercial banks, they issued their own fiat money, and there were no central bank issued currency. Banks were often then tempted to over issue money without backing. So that led to episode of loss of trust and bank runs. But what is often missed in this argument is that this era was without central bank reserves ensuring the parity. So I'm not sure that is a relevant example. And then seen from a Danish perspective, it might be different in other countries. We kind of see cash playing this role. There are actually a couple of factors that indicate the other thing. One is the active choice of cash choice of digital money instead of cash. We have instant payments. We have regulation that ensure trust in money. We have the deposit guarantee that ensures that your money is safe in the bank up to a certain limit. When we ask consumers, the consumers that use cash as a store of value. So you could argue that the consumers that use cash as a store of value, that's because that they they put more, or they rely more on cash as central bank money than digital money. But when we ask them why they have cash as a store value, it's because of the possibility of anonymity that's the primary reason. So if banknotes slowly becomes, less and less used, that would indicate, from my point of view, that people have trust in the digital instruments offered by PSPs, and such a system would still be anchored, because it would be anchored by the base money, by the central bank reserve, right? So that would still ensure the parity between private money and central bank money. So from my side, the monetary anchor is not, at least I don't see any significant evidence of it being cash. And you can also argue that majority of citizens may not even know the difference that cash is a claim on a central bank and that digital money is a claim on a private bank. And if they're not aware of that, how should they see cash as a trust? But so the monetary anchor from our side is the access to central bank reserves from banks that ensures the parity. It's the combination of appropriate regulatory means of banks, the deposit guarantee, trust to the independence of the central bank. This is a combination of this, I think, is our take, at least for now, that provides the anchor of trust. So we're a bit skeptical of this, but it's something that still needs to be examined. It's not, you don't want to draw a very hard conclusion on this, because there's a bit of psychological issue or element in this discussion, right? How do people view cash, and what's the trust built on?
Thank you, Samuel and Michal. There's something very interesting in the last argument, in the sense of whether people on the street are able to differentiate between central bank money and commercial bank money, or even electronic deposits. Perhaps we can add also the stable coins discussion here. But the thing is that perhaps the users are not well aware of these differences, and simply perhaps if they are, they don't care that much. So I think the use case perhaps is more important, or it's becoming more relevant to this discussion as time goes by. Because if there's no good use case, it doesn't matter if it's issued by the central bank or the private sector. It's just a use case thing. Perhaps that's a good thing to keep in mind. We have just a couple of minutes, and we have still a couple of questions that I'm going to try to blend. So it will go like this. I just mentioned stablecoins. We also have tokenized deposits which are being discussed right now. What do you think, Michal and Samuel, is going to be the future of money in the next 5-10 years? And let's make two scenarios out of it. One scenario is with central bank designing and rolling out retail CBDCs, and the other one with central banks just ditching or abandoning the idea of retail CBDCs. I know it's very difficult to talk about the future, but let's give it a try.
Okay, it's very difficult, so I'll give it a first shot. I think that, there seems to be quite a lot of commitment from the Eurozone and the EU institutions, or the European Commission and European Parliament as well, to give digital euro a try. So I think it's fair to expect that it's gonna happen. The challenge will be to come up with a use case and convince enough users to use it. One of the things that certainly interested me in the legislative proposal that I'm just reading is that it should have offline payment functionality from the beginning, from the get-go. So that's I'm looking forward to how this is gonna be, how this is gonna work technically, and that's definitely interesting. So I'll leave it at that.
Yeah, and I'll echo the difficulty of this question, Carlos. So I agree that CBDCs are most likely coming, right? Whether it will be within 5 to 10 years, or maybe 10 to 20 years, that might be, yeah, we'll have to see. But I think it's fair to say that, I mean, money has always adapted and evolved, right? So and we see an increased digitalization. We might see an increasing demand for money that somehow fits into a more digital, perhaps more tokenized economy, whether it will be Web3 or metaverse or whatever. I mean, so I think it's fair to expect some kind of demand for money that has more functionality than the money that we have today. So CBDCs, of course, can perhaps be something that facilitates this. I mean, other alternatives that are quite there is tokenized deposits, right? And stable coins. So these are just money, the money that we know, but put on a new technology. And one point that I would like to emphasize also, that perhaps the only related party to this is that the discussion when we talk about CBDCs in the future, to distinguish between asset and payment system. So CBDCs are often a combination of a new payment system and then you put central bank on it. And a lot of the benefits from reports and experiments relate mostly, as I read them, to creating a new payment system or new payment infrastructure, and to a lesser extent putting central bank money on top. You might as well put bank deposits on top. So I think there's a case for new systems that are more interoperable, and there's a case for improving cross-border payments. That's for sure. Whether it will be CBDCs that will facilitate this and drive this, or it will be wholesale CBDC that, you know, so you start from a wholesale level and you build new technology, and that eventually evolves into consumer solutions. That is yet to be seen, I think.
Michal, Samuel, thank you both for answering the set of questions that we had organized. Now we have about 12 minutes to address the question from the public. So let me start skimming over those. Perhaps the first one is a rather simple, but it has some spice there, which is, are instant payments or fast payments and retail CBDCs complementary or not? Michal.
Well, I don't see them as complementary, really. As was mentioned by Samuel just a minute ago, you know, if you already, and BIS is stating this as well, if you have a well-working instant payment system with a mobile proxy functionality, then the extra mileage you get from CBDCs seems to be rather limited. So in our case, we have instant payments, not as widely deployed or not as widely used as in Denmark. About 20% of all payments now go instantly. What we're lacking is a sort of killer app that would be used like in Denmark or elsewhere in Scandinavia, but then we don't really gonna, you know, we're not gonna develop it for the banks, you know, or for the market. We think this should be a market-driven development, and eventually it's probably gonna come.
And I agree, and just maybe one added point is that in this discussion, it depends on how you see also the monetary anchor argument. So if you think that central bank money plays an important role in ensuring trust, then then instant payments cannot compete, so to speak, with CBDC. But if you see that the objective that you want to solve, or the problem that you want to solve, is a better system, then I think instant payments is a long way. It's very competitive, so to say.
Oh, maybe a quick follow-up, if I may.
You are.
Yeah. Well, one thing to mention, perhaps, we have unusual setup here in the Czech Republic that we don't have an automated clearinghouse. So all interbank transactions, including instant payments, even if you pay just 1 Czech crown, it all goes through our RTGS. So in a sense, already, they are being cleared in central bank money as it is at the moment. So you don't even have, it's not, the liability at the end is not central bank, but it goes through central bank. So really how would you expect any added value? I'm not sure. On the other hand, we did have a local bank owned by Sberbank, which went out of business after the war. So some deposit insurance only works up to a certain limit. There was some public money there as well that is now being still in the insolvency proceedings. So some users, especially with big balances, might see some benefits of CBDC. In a sense, they don't have to worry about deposit insurance or manage their exposure to different banks. But is this really a case for thinking about retail CBDC? I'm not sure.
Thank you, Michal and Samuel. That was very interesting. The next one is a question that I picked because it has to do with something that I tend to say a lot. And it is the fact that central banks are not used to designing products. So they're not designing products to compete. And the question goes more or less like this. Central banks have not competed with the private sector for centuries. They have not designed anything to compete with the private sector. Should we allow, or is it a good idea that the central bank competes with the private sector right now? Is this a dangerous precedent to make?
So if I should start, so firstly, I think that the antitrust or competition authorities also would have a say in this, right? So it's basically one take is so when do you want a state solution, right? When is that appropriate? And that state solution is often appropriate if there's a market failure that cannot be solved either by regulation or other means, and then you end up having a state solution, and as it very rarely is very efficient, because central bank we are not innovators, to at least not in the retail space. And I think that's also why then when we see CBDC projects, most of them rely on private players to carry out the last part of the value chain to develop these consumer-faced applications in order to at least to some extent step back in the competition in the market. But still, you can argue that there's a distortion because these payment service providers, they need to be incentivized to some extent to motivate them to develop these solutions, and this incentives compared to the incentives on market rules, how do that evolve? So I think that's a very topical question, and I think it's a difficult one for central banks to go into that space. It needs a lot of thought.
Michal.
I'll just comment shortly. As a citizen, I think there should be, change of mandate or tasking the central bank with it if the legislator and the population wishes so. Then central bank should execute such a mandate. If there is no demand, then we shouldn't really be thinking about it. And we stated clearly in the document that we published, issuing CBDC would require a change of legislation, and we see no reason to propose it for the time being.
Good. Now I'm going to pick the last one, and the last one is a very interesting way of portraying retail CBDCs. To what extent does a retail CBDC simply represent a form of narrow banking with the big difference that it's public and not private? Samuel, let's go with you first. You're the competition guy, I guess.
So the narrow banking is a whole discussion, I think, for itself. That's very interesting, and it goes, it would be if you, as Michal said earlier, I think it's more or less of an accident that we ended up with this system, and we put some safeguards around it. And if we were to reset the whole system right now and build it up again, how would we do so, right? So so that's one very, very big topic. And I think with taking it to CBDCs, if we go narrow banking, then we need at least a limitless access to CBDC, which is at least not the thing that you see in the pilots, right? All of them more or less have a cap. So, and that cap can be larger or small, but that is something that will fundamentally change the way the system works. So if you make a CBDC and you make it without a limit, and then you can end up potentially in a narrow banking system.
Yeah, just a short comment seconding this. I think everywhere you see CBDC developments, there are, plenty care is being taken. They don't end up with a narrow banking by accident, because it would be very difficult to transfer the current system to a narrow banking system without some economic or macroeconomic repercussions.
Good. Thank you, Michal, Samuel. I think we can start wrapping up the retail CBDC broadcast. This is not only retail, but today was retail. So if you want to get in touch with Samuel, Michal, or myself, in the slides, you can get the links to our LinkedIn profiles. So everyone, thank you for joining. This is the end of the CBDC broadcast number 8. And coming in July, we'll have a couple of broadcasts with the guest speakers from the institution that you're seeing in the slide. So thank you everyone for joining today. Once again, Michal, Samuel, thank you very much for your expert opinions and for having such a joyful and interesting discussion. We hope to get you here once again in the near future. Everyone, have a very nice day.
Thanks for having me. Bye-bye.
Yeah, thanks for having us. Thanks. Bye.